Hey guys, I hope all is well. I took some time just to think about some of new topics for the podcast. I'll be honest with you; it's very hard to do it daily, and it's hard, to come up with topics that are practical, right? So sometimes I'll be honest with you. Sometimes I just don't have it, and sometimes I take the time to think about it, and sometimes I am looking at the feedback of other people um, to my own research, and talking to customers and potential customers to see what's on their mind and what sort of issues they're dealing with. And even when I decide on the topic, it's not necessarily because somebody brought up this topic. It sometimes could come about very indirectly because customers are inquisitive, or I would say, or potential customers that could be inquisitive about something, and then they ask a question a certain way, but they really have a totally different concern that I've learned to kind of to learn to respect, because sometimes they're overwhelmed, they're asking one thing, but they really need to know a lot more than what they've asked, and try to give very comprehensive answers. Having said that, today's topic that I want to focus is how long can a method last. Okay, so because I'm going to talk a lot about past performance and things like that, and multiple systems, just want to get the disclaimer out of the way and tell you that there's a substantial risk of loss in futures trading. Past performance is not indicative of future results, and further, everything in this podcast is my opinion. All podcasts are my opinion, and I'm going to compare between short-term systems and long-term systems and day trading, and their relative, the relative, I would say, difficulty in each one. But nevertheless, I want to say that there is no easy money out there, and every system, every time frame has its own challenges. So, for the sake of this specific podcast, I want to separate two words that are used interchangeably in the futures trading industry, or maybe in the trading industry. It's method and system. So people say, "Hey, what's your system? Hey, what's your method?" They really refer to the same thing. But in this specific podcast, I want to separate the two words. Method for me means the overall look of things. Like, how do you look at the markets? Like, what are the bigger picture that makes you go long and short? It could be technical indicators, it could be market profile, it could be your Fibonacci, it could be whatever it is, right? But the system, it's the small variables, right? That have to be kind of tweaked sometimes, So, for example, somebody could use, again, hypothetical example, moving average, RSI, and a MACD, right? But his moving average that he uses is a 20-day moving average. That's the method. The method is the moving average, right? It could be weighted moving average, exponential moving average, but he uses this moving average of 20 days, or for that, and let's say on the different periods, he could change that to 25 days or 30 days. So the method overall does not change, but the variables in the system could change. So that's important to keep in mind, in differentiating between changing an entire method and throwing it out, as opposed to changing the system and seeing how it works. So let's start on that basis. So I believe, okay, that methods with the same systems can last for a very, very long time, but it really depends on the market. And we're going to touch on a number of things that has to do with, changing of a method or tweaking the system within the method. But one thing I wanted to tell you, that it's challenging, right? So I'm not here to give you easy answers. I'm really here to give you like everything in terms of thought, of everything that goes through my head if I was to approach something like that. So again, methods can last for a long time, along with systems, but it is very, very hard to believe that you can just put something on an autopilot and just let it run the same way for a very long time. Again, it could be even years, but at some point you might have to change the system. So people refer to markets, in two states. Either they're calm or volatile. But there could be many, many states to the market. I'll give you an example. So you can have, for example, an uptrending market that goes up and then goes into a sideways, goes up and goes into a sideways. Or you can have a market that goes in a straight line up. Or you can have a market that has very big zigzags to the upside, very lower lows but higher highs, right? So it's huge fluctuations of zigzags that can be directional. And the same thing on the downside. You can have the zigzags, with new lows being established. You can have a market that goes down slowly, and then you have sideways and down and slowly. Or you can have a market that's just collapsing, just days of collapse upon collapse. So it's important to determine where does your system perform better, under what type of volatility and what type of direction. And then you actually create to yourself, you create for yourself a dynamic type system, right? You create something that's dynamic, not necessarily where you have to change the method all the time, but rather periodically maybe change the system if the system change the variables in the method, which is the system, if the system you think stop performing. Now, that's tricky in itself to determine, is the system going through a drawdown, or is it just going through or the system or the method stopped working, or the system needs to be tweaked. Most of the time, I would assume, again, in my opinion, that there are the drawdowns. I just want to mention they're very normal in this business. They're normal, and so if you encounter some periods like that, I don't suggest you just go right away and start changing things. That's the problem with many beginner traders. They trade, they change the method. They don't change the system, right? They change the entire method. And going from one method to another method, it's just tough. So I'll give you an example of what changing an entire method. So let's say one day you use just support and resistance with some sort of a moving average to assist in your trading, and you switch it all together to market profile, right? Which is a totally new way of looking at things, right? Which is volume throughout the day, a lot of HFT that comes in and out. So it's important to also understand what you're changing to, how dynamic is it, and do you have the strength in analyzing those kind of methods that could be a little bit more sophisticated to your liking or to your skills. So even for myself, there are certain systems out there that could be, for example, they implement a lot of statistical studies. It's not something that's within my strength. I know math, I know stats. Nevertheless, there could be a level of math and stats which is beyond my understanding. So again, it's important that you understand the method that you created, the variables in it, and you could play around with the variables periodically to see if it's working. And again, you have to backtest it enough to understand what is a drawdown and where our drawdowns occur and how long they last, versus just starting to tweak it. So as I mentioned before, in the beginning of this podcast, I'm going to talk about a few time frames. Now, I believe that the shorter the time frame, the harder it is to develop a system. It potentially, again, in my opinion, could be a little bit more consistent, but it's harder to develop. So day trading systems, because they rely on very strong momentum throughout the day, and again, volatility could be different from one day to the next, but nevertheless, it's very short term. And I believe on shorter term, it's very challenging to find a method. On the other hand, long term could potentially be a little bit easier from a method standpoint, because you're trying to ignore the noise that's in between, but the price that you pay is basically the huge fluctuations, and also you're not closing your positions, right? So you're sleeping at night and you have a position and you're there, and it's a leveraged product. So you also have to ask yourself, do I have enough capital and do I have the risk tolerance, to do something beyond day trading? A lot of people in futures trading are day trading. I understand them because it's a leverage product. I don't treat futures trading as an investment per se. It's a speculative tool that's given, in my opinion, to traders, because you put a little bit, you control a lot. And so not saying that somebody who has a lot of money can turn certain commodities into investments, but in my personal opinion, it's not, your traditional investment tool. But again, it's because of the leverage that is involved in it. So that's for that. Okay. Now, the next thing that I wanted to talk about is basically when you have changing market conditions. One thing that you could do when you trade something is basically trade around the market bias. Let me give you an idea. So what does it mean to trade around the market bias? So let's say that you have a method, right? But the markets have been trending up. So right now, for example, we're seeing markets that are trending on the upside, and you have, for example, the Nasdaq, right? I'm talking about the NQ, or those who trade the micro, they trade the micro Nasdaq. So it's been trending up. So you can have a method, right, that is basically, because the market is trending up, that could fail you a little bit when you're getting the short signals. So when you see a very strong trending market on the upside, you could say, okay, you know what? I'm probably going to take more longs than shorts, unless the trend for the day is short. So let's say the trend on the day is up, and you know what people say, well, define trend. Okay, that's a tricky question, but at the same time, look, if the Nasdaq is up 100 points, I say, okay, the Nasdaq is up, and that's not a trick question. So if you feel like the trend is, the market is up for the day, you could trade around the bias of the market, which is to the upside. So again, in asking the question, can a system could potentially, be lasting for a long time? I would tell you, yes, it could. But again, as you see in my last example, you sometimes have to use your discretion a little bit of when to use it more, as opposed to other times. And again, trading around, the market bias. So that is also some sort of a consideration, for your trading in the systems. So, in conclusion to this podcast, in saying how long can a system last, again, as I mentioned before, I don't believe that something can be working on an autopilot. Now, just something that came to mind before I actually end this podcast. Let me give you an example, okay, because I used the NASDAQ, of where you could have a little bit of a market bias. So let's say you're trading the NASDAQ, right? The NASDAQ futures. And not long ago, sometime this year, I believe that the NASDAQ broke the 10,000 mark on the cash. Now, again, best performance is not indicative of future results, and I don't know what the future holds. But potentially, when something like that, for example, breaks, okay, that could send you a signal that maybe right now you could have potentially more to the upside, right? As far as trading, as far as direction. So you could say, okay, I have a method and I have a system, but now it could be a little bit more biased on the long side. Or if right now, let's say the NASDAQ went all the way up to 12,000 and then came and broke down again 10,000, it means that maybe something fundamentally didn't hold. maybe potentially something is not working. So now you can take maybe a little bit more of short positions, with the same system. So again, the trick here is really not to always keep on replacing the method and not treat it as something that could be, substantially automatic. Now, the interesting part is that when I talk to more experienced traders, I really don't get a clear answer, because I asked them, I said, do you change your system? So they start talking about, look, I do this, I do this, I do this, I do that, and I don't get a clear answer whether they do it or not. Now, the people that I try to talk to, are people that are successful, and they say depends. But here's what I think. I don't think they're trying to avoid in giving me an answer. I just think the process of understanding the systems and understanding the markets is something that is basically, they've been doing it over the years automatically. And there's certain triggers that happens in the market that make them think in a certain way. So for example, they would use a certain method when they day trade, but at the same time, the systems that they use, all of a sudden they would use the risk and the reward, or they'll change it on a higher volatility. And they've learned to do it over time, kind of adjust to it automatically and then adjusting back, while realizing that between adjusting it from one period to another, there will be some losses that they'll encounter, and then they go back. So they don't do it on a hunch. They're willing to take, the signals for the market, and the market sending them signals that they're doing something off, and then they change it. And they recognize it, right? They recognize it, that there's certain, when the market is not performing well for a lengthy period of time beyond of your back testing, this is where you have to go in and start thinking, okay, what do I change here? But again, I would encourage you not to change the entire method, but look at the variables of the system. They say that nothing lasts forever, which is also 100% true in the futures industry. But again, when it comes to methods, but at least one thing I would encourage you to do here is to look at your method, look at under what conditions it performs best, what markets does it give you potentially the highest return, and trade during those periods, and also think about how to adjust it during periods that the market is not giving you that type of a return, where you want to trade with the risk on, right? So you're saying to yourself, okay, I have a method, I have a certain risk and reward that I use on systems that trade during those kind of periods. And again, as I mentioned before, you can have many scenarios of markets and the way they go up and down. There is no just volatile versus not volatile. You can have volatile directional, you can have non-volatile directional. So there's a lot of scenarios out there that I can't even think of right now that could occur in the market. But that's your challenge, really, as a trader. That's your job. Your job is to determine what market is it. Is your system performing well under this market? Can you trade around the bias of the market? The bias on the upside in a certain direction with a certain volatility, you trade around that bias. Bias is not only direction. Bias is also volatility. Bias is also the risk and reward. So all those things that you that come along with developing your trading skills, those are the thing. What I'm saying is those are the things that is part of developing your trading skills, is thinking about, under what circumstances can my system perform. If there comes a time that you gave up on your method, not on the parameters of the system, but the method, that you reached a conclusion, which I have to respect at the end of the day. I can't evaluate every system out there. I hope you weren't in a complete, what's the word I'm looking for? I hope that you weren't in, threw it out really fast because it didn't work for 2 days, right? Or you went from paper trading to real trading, and in 3 days it didn't work, and now you want to change your entire method. I hope that whatever conclusions you come to, if the system did not work, were under the right circumstances. At least if you canceled that method, but you traded it before for a long time and it was good, or if you never had a chance to trade it under good conditions and it just consecutive losses because hypothetical models or paper trading models, everything gets filled. Sometimes hypothetical models don't take into consideration the cost of execution, right? So some people say, I want to take a tick, but the transaction cost, even from the exchange alone, can, would regardless of the broker, would be a hurdle. But let's say that you did have a method that you developed, and let's say it worked for a long time. And I'm talking about, either worked for 6 months or a few years or anything like that, but now it's just got into a really, really bad, state, and you already tried to change the variables, the system within the method, and it still didn't help. Well, there's nothing wrong with maybe developing a new method. However, at least now you know what to look for when you develop this method. So you can repeat the same thing over again until potentially it gets broken. And again, I believe that some systems do not have to be changed all the time. I think it's the systems that could be changed every few months or every few years. And even then, if you do it, just do it for the right reason. And unfortunately, losses in themselves are not enough. You have to put the losses in the context of time frames, drawdowns relatively to the gains that you created, right? So if you had 1 week enormous returns and then the market took some of it back and now you have modest returns, it does not mean that your system is bad. Or if you had, modest gains and then you had, a week later, losses that exceeded your wins, again, it does not mean that your method is bad. It could be that you've been through a bad period, and this is something that every method will go through. So, in conclusion to the answer of how long can a method last, well, it's the usual answer. It depends. But at least now you know the variables to consider when you're evaluating and working with your method. I wish you profitable trading. I wish you all the best. A great week. Stay safe and healthy. And just remember, if you're looking for a broker, we would love to service you. It's www.optimusfutures.com. And also, if you want to call us, it's 1-800-771-6748. Local is 561-367-8686. And just reminding everybody that there's a substantial risk of loss in futures trading. Past performance is not indicative of future results. Please trade only risk capital. Don't put yourself at risk beyond the one you can afford. That's it for now, and we'll see you on the next podcast. Thank you.